Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Core and Factor Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq 100. We'll also take a look at the market's reaction to the key CPI data this morning. Ryan, it's great to see you as always. Welcome back to Trade Talks, and give us a review of what we've seen as we kick off the second half of the year in terms of Nasdaq 100 performance.
Thanks, Jill. So not quite the follow-on to the strong first half that we saw. The best first half for QQQ in its history, going back to the late 90s. For the week, QQQ and QQQM underperformed the S&P 500 as well as the S&P 500 Value Index. QQQ and QQQM were down 0.58%, while S&P 500 was down 0.33%, and S&P 500 Value up 0.46%.
And let's take a look at the market's reaction to the CPI data that we got this morning. Of course, the Fed is laser focused on what we saw with Core, but we are starting to see a number of the data points that go into CPI coming in a bit.
Yeah, and you know, I think today certainly bucks the trend of the past week. June headline CPI coming in at 3%. That's down from 4% in May. So, a pretty big move, and better than the economist expectation for 3.1%. When you look at the core, right, that's proven to be a little bit stickier, and that reading, of course, stripping out food and energy, that was reported at 4.8%, still better than expectations for 5%, and down from May's reading at 4.3%. I think that the big move in the headline is, it's kind of eye-popping. It's the lowest figure since March of 2021. You see a 3 handle on the inflation figure, and certainly after 3 is 2, which, at 2% is the Fed's longer-term target. You look at the core reading; it's the lowest reported since October of 2021, so almost 2 years on the core. And thus far we're seeing the market taking this pretty positively. You see QQQ up 1.34% as of about, let's call it 10 minutes ago. S&P 500 up 89 basis points, and S&P 500 Value up 83 basis points. We're seeing Treasury yields falling, so you have the 2-year moving lower by 13 basis points, again, as of about 10-15 minutes ago. And we're also seeing expectations for FOMC activity also adjusting. So the probability for a July rate hike jumped from 88% yesterday to 91% today. But maybe the more glaring reaction was the probability for a September rate hike. That fell from 28% yesterday to 13% today. So effectively, this perceived progress against prices that we saw through the release of CPI this morning seems to have the street believing that there may only be one more rate hike in the cards from the Fed.
And finally, Ryan, where do we see performance of the sectors last week?
Yeah, so from a sector perspective, information technology and discretionary drag QQQ lower for the week, both trading lower and underperforming counterparts in SPY. Outperformance within the healthcare sector and communication services sector were the biggest positive contributors to relative performance against the S&P 500. But I think as we look forward, earnings season is just beginning to kick off, and I think we'll see a lot of activity here in the next couple of weeks.
We certainly will, Ryan. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.